Welcome back to Hedgeheads, brought to you by FM Bank. John, do we have anything to talk about today?
We have lots to talk about today. We are going to learn how to recognize what kind of market that you're in and how it changes your marketing plans. We're not going to lump every year together. This year is very individual, very different, and we'll tell you all that we think is going to happen or kind of unfold over the next year.
Plus cattle and copper.
Cattle and copper are going to be in there today.
Let's go.
Welcome to Hedgeheads, where hosts John Prischmann and Ryan Tungseth discuss commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. While no one knows where the market's going, they're not afraid to share some ideas.
Well, John, my yard is burning up, so if we're just going by our yards, corn should be, what, $10, $11?
Yeah,
That's what I'm thinking.
If you're looking at the yards, you'd be bullish. We're bad here for sure. North Dakota, I'm finding out it's a lot worse. Talking to guys on the phone, sounds like it's very widespread. A guy in Jamestown is about the only guy that's not worried. The rest of them, it seems like it's worse than here, and it's hard to gauge. So that brings us into the topic that we're going to talk about a little bit.
Ooh, what's that?
This is a year, and you remember how I said you got to need to start planning for the next year right now. And that's where this will fit in. We have a wide variety of outcomes that this crop could potentially be.
Oh, that's for sure.
And it sounds like why state something so obvious, John? Because what happens is guys tend to lump things together.
I was just going to say, if I look just on Twitter, there's only two outcomes. It is going to 11 or it's going to 3.
Yeah,
and there's nothing in between.
Social media has not helped anybody's marketing, by the way, and you could argue against it. It hasn't. I'm not saying you didn't find a guy that you like, information-wise on Twitter, then follow that up and you work out with him on a personal level. That's not what I'm talking about. What I'm talking about is the guys that go online to read stuff. If you seem like you're getting confused, it's because you are. It is exactly what it is. It's free information online, and that's the way you should treat it. But unfortunately, a lot of people market with this stuff nowadays, which I find pretty incredible. There's guys that definitely lean on us for our very big network that we have, that we built up. I've been, around 15, 20 years. And you get a number of contacts. And so when you don't know the answer, odds are some of your contacts, well, that's a cleaner channel of information because these are trusted contacts that you built up for in a lifetime. So if you go online, you're going to get confused, and rightfully so. We're going to see our first look at the numbers tomorrow. It is a farmer survey number, meaning it's just survey numbers. It's not actual USDA data numbers. It's just what they answered in the survey. That's what you're going to see. It could be up. It could be down in yield. This one is wild. Why I say it's normally disappointing, let's say it's kind of a hot, dry year like this, they tend to slowly bring down yield, so it's disappointing in the bulls that way. Not that they don't bring down yield ever. They definitely do in August. It's a little more rare than raising it, but still, it's just the data. But it's going to give us direction. It's going to give us some volatility tomorrow. I don't doubt that. And so back to, you need to make this year a year where you're planning for a wide variety of outcomes. And when I say that, I mean this potentially could go much higher than where we are, what we've seen for the last 2 years. Now, of course, we don't know that because we don't have any of the numbers. And what also separates this year, and this is really, again, breaking down the year that you're in for better marketing. We have Russia, Ukraine, which is getting worse. So why does that matter? They ship a lot of corn and a lot of wheat out of where it's currently getting bombed. I think it's been 5 nights in a row now for Odessa. And it doesn't seem like they're going to hit the numbers that the USDA has on the books. Yes, we keep track of Ukraine's exports, and that is part of the reports. So it does matter. We also have the Iran situation. If you notice, the diesel, the heating oil, went up 30 cents yesterday. I think it was actually 28.5 cents.
Still.
But don't worry. The other 4 cents they tacked on it today made it 32 cents over 2 days. So in my mind, you have to be open to a lot of different outcomes, and that's the way your marketing should be planned. So how do I think that this will play out, or what would I be planning for? Let's get a little more specific. I would want to re-own some bushels this year. Not so much keep the upside open. I think if you're storing it, you're keeping the upside open by storing it. So I'd rather hang on to the product longer if I can. And the ones that I either pre-sold or that I don't have room for storage, I would personally be looking, how can I re-own this? And I wouldn't overcomplicate it till we get more numbers in, but that's the way I'm leaning right now. So even if we have a negative report tomorrow, I'm going to be looking for ways that I can own this over the longer term. And you might ask yourself, what are some ways?
Yeah, give me a couple.
Last year,
I need something.
Last year, what worked really good is in the September contract, we sold puts, and it would have been the 415 put. And we took that 19 cents that we got for it, and we turned around and bought a 470 call with that. And this is both in September. So for what you sold the put for, 19 cents, paid for the call. So you didn't have to do 470 plus 19 cents and 489's break even. It was 470 break even. And how did that turn out? It turned out wonderfully. It really never got down anywhere near 415, because if we're at 415 come springtime going into plantings, that would mean the May front contract, it would be at the time, would have to be right down near 375, 380. And I don't believe that we're going to be down there during plantings. Not that we couldn't be. Right. I'm just saying it's unlikely. So that that's why I chose that number. It made sense that it could hit 470.
And it's important to mention that we're talking likelihoods.
Yeah. And this already happened. It's not like I'm going to repeat the exact same thing. This year, I'm probably looking at a May timeframe more than I'm looking at September. But I might go back to that September timeframe as well. I might even use December. It just depends on the carries. It depends on what day we do it and a lot of different things. So if you sell a put, you might re-own those bushels at that price. And that's what I'm talking about. Worst case scenario, we're re-owning bushels at that price. And I want to re-own it at that price. Now, this is not a strategy that doesn't have risk to the downside. This definitely does. And you're saying to yourself, I already have enough corn. I don't need more corn. Well, this strategy isn't for you then. And that's kind of how the markets work. Work for one guy, might work really good for another guy, might not work at all because they have storage and they didn't sell any of their corn. They don't need to do this. So it's more of an individual deal, but that's where I'm going to be looking at. How can I re-own this? Do I want to buy futures this year and just have that risk? Do I want to do the sell the put, buy the call, which is like, it gives you a wider berth to be wrong on the downside, but you also don't get to profit from day one on the upside. So there's a lot of different ways you can look at it, but plan. We talked about this. Our new partnership with the bank, they're very into what we're saying as far as planning goes. You're busy this time of year. Everybody's busy, but you do need to start because you don't want to keep falling into these cycles where you see these trucks hauling grain in right now, Ryan, don't you?
Yep.
These guys, you'll see these trucks every year, and they kick sand every year, and they don't understand how they got themselves into this. It's because they only plan for the next month ahead. And you end up holding too much grain for too long, or you don't realize a year with 2.2 billion bushels, maybe it's not a good idea to store this into springtime. And I'm not saying I had it figured out, but these late bushels in late July, early August, don't tend to be real high price bushels. Nobody's bragging about them. You're not going to hear about them.
Basis is usually.
Yeah, basis is bad. But guys fall into this trap all the time. So we're talking about breaking these mistakes that we made by trying to pre-plan a little bit better. And even if we're talking about the new crop corn right now, I feel like it's not late for it, but it's like we're getting to the later stages for what we want to do with maybe the remaining 40, 50% you haven't sold, and the 40 for 50% that maybe you already pre-sold. So that's where our planning is. We don't know the numbers. We don't know what way anything's trending. You'll hear a wide variety of opinions on where all this belongs, what the yield's going to be, 186, 187, 172, 177. It doesn't matter. All that stuff's just noise. Wait till the number comes out and start planning. Is there anything we can do going into this report tomorrow? Yes. And I've talked to my clients about it. There is a couple different things. I am buying volatility. I'm not going to tell you specifically what we're doing, but there is, on a scale of 1 to 10, it's about a 5. I do think that the option prices are too low, but I also don't think there's a lot of meat on the bone, for a gigantic surprise that's going to be earth-shattering volatility.
Not typical of this.
No. And then what if it's bearish corn and corn plunges? Can we buy a put? I've been asked that a couple times. When you're spending 13, 14 cents for a put for not that much time, and there's only 20, 25 cents to the downside, at least that's what it looks like historically. It's hard to make money at that too. So you're kind of just, not that it can't come off, it's just there's not a lot you can do about it.
Right.
So I'm keeping my powder dry. Excuse me. I want to see the numbers before I really get into it. But that's really what I wanted to say, is that recognize this is a very different year than you've had the last 2 years. And it sounds so simple to say that, and like, well, everybody realizes that. They actually don't. No, it's not very common. They're just like, I got burned by holding this. I'm not going to ever do that again. I'm going to get rid of everything off the combine this year because I'm not going to let that happen. It's a terrible attitude. It's a terrible attitude unless the numbers fit what your opinion is, and they don't. We're missing all these pieces of the puzzle, and we have been for a long time. That's why I kept saying keep your upside open. Hold on to these bushels as long as you can. The weather ended up turning around, but still enough damages out there that I think that you're going to see a progressively friendly report every report that we go through. But it is the USDA, and we don't know that.
Right. Yeah, and plenty of people like to argue with whatever the USDA has. So whether you believe it or not, you still have to trade it to a certain extent.
Yeah, I don't understand the big pushback. I think that people are taking it far too personal, but it is personal because it does affect the bottom line.
Yep.
And that's where the anger comes from. But it's just fruitless, and all it does is make you not involved with the markets, make you bitter about the markets. And if it's really that bad, then you really should look for a different line of work, because or get involved in politics and try to change what the system is.
Right.
Like, it's just, you waste all your time. You get caught in these negative loops. You get caught on trying to guess what the yield is, and none of it matters this time of year. Eventually, you can make educated guesses, and it will matter from like October to November to January. But still, the USDA does make it hard to predict, to set yourself up for easy hedges. They do make it a challenge. We deal with it. I'd rather have it a lot smoother, but it is a system we have. These are the numbers they're going to use, and it is what it is. Where I think that you fight the system is look at basis, study basis, not just in your area, in all areas. Look at the spreads. What are the spreads telling you? And I don't think you need the USDA's numbers. Guys will say they're way too high in this or that. And I don't think the spreads or the basis lie. Meaning, if the people in the channels don't need your grain, you're going to have a low basis. If they need it, the basis is going to be good. I don't think there's any grand conspiracy on that. So there's other guys that feel like we should get rid of the markets altogether and be cash markets. Now, that's a terrible idea. How is it going in the cash markets for you right now? And then without anybody driving the price up ever, how do you think it's going to go for you?
Right.
So we need to find this equilibrium where everybody's happy. And I don't think it's possible nowadays because of online.
Not everyone's going to be happy, but you do need to look holistically, I think, is what you're talking about in that. Like, are you going to be happy all the time? No. Are you going to be happy some of the time? Yes, because of how the market moves. But it's a holistic number. Look at basis throughout the country, or at least some major areas. Look at the USDA numbers and respect them. Yeah. Even if you don't agree with them, they are going to tell you where the market's at. So if you think they're off, that might tell you what direction the market's going to go soon. If you actually think you think the USDA numbers are way too high, for instance, that would tell you that when they have to correct them at some point, the market's going to go up, right?
Yep.
And so looking holistically at that, you can say maybe not when, but if you truly believe the USDA is wrong, it does have to correct at some point.
It will, and that's where the opportunity is. As a matter of fact, people have a really short memory span also. The USDA was way wrong on corn 2 years ago. They had it way, way too low. Yep, don't fall out of your chair. They had us at 1.2 billion bushel carryover, got us to a price that we shouldn't have been at. And I think it was 509, 520, something like that 2 years ago. We should have never been up there because we definitely had more than 1.2. The spread set it, and the basis set it well before we topped out there. That again, back to the basis and the spreads, they never lie, or they very rarely lie, and they can't hide. They can't hide if it's short. You'll see it in the big 2019 run up into 2020. The market fell for a year when everybody knew there was very short supplies out there.
Yeah.
But what was different is that basis was minus 30 here for 2 years. All the way through harvest, it didn't matter. Highly unusual. Basis is normally minus 60 going into harvest, minus 55. So it did tip a guy off to there was not near as much as they're saying in the channels, and plan for that. It did take a full year and a half for everybody out.
That's the thing. You can't know time, but it is signaling watch.
Yes. And beans have been giving off some of those vibes, but I don't like the way the bull spreads have been up front, and it is the way they were investing in the markets this year. By the time they got bullish beans, it was a little too long, or too short a time frame to invest in July or August. So I felt those spreads got skewed. Basis though was never awesome either. So I would say the spreads were wrong. I would say there was probably too much carry in the bean market for what was going on. But look at what's different for beans this year than last year. Look at how well beans performed last year. China didn't even buy anything all the way into January, was it?
Yeah.
They didn't buy anything. Look at the amount of demand we already have on the books. Back to what's happening in Russia, Ukraine, what's happening with diesel prices and the inputs, everything's going up. This is a very different year, whether you want to accept it or not. It's very different than we've had in the last 2 years, and you should treat it as such. I think that you're going to have a lot of opportunities. It's just how you approach it right now. I think you take it on a kind of a week by week basis, which is normal for this time of year. We're going to see some more numbers come in. Are we going to add a bunch of corn acreage tomorrow? That's a big hurdle that we got to get past. The data that's collected by the government saying that we have more corn acreage on the way, that should show up in these reports. And if it doesn't, then that's an awful good sign. Now, what would a good number tomorrow be? Anything that's less than 184 in corn, and anything less than 53 in beans tomorrow is going to be a very friendly number. That's what you should be watching. By the time you listen to this, the numbers will probably be out. Not very predictable where this one lands because of the surveys. But I'm excited for this year. It kind of started last year. We have a lot more opportunities. These are different markets. I wouldn't say they're super predictable. Trump and Iran's been really unpredictable, but that's getting to be a little more predictable right now, and oil's been going up every day. There'll be opportunities. I'm leaning towards re-owning some bushels this year, so that's what I'm going to be working on. And what about December 27? Guys were asking about.
Yeah.
Should I get this 490? Should I grab it? It's hit 490 every single year. Before you see anything, I'm not in the camp that I would be grabbing it.
Can you get it and leave your upside open? That would be my response back.
Yeah, but
I don't think you can now.
But that's our opinion. But when you take a deeper dive into that number, there's going to be guys that are buying inputs right now, and the bankers and the guys that they're working with are insistent on, if you're buying the inputs for that price, that let's lock in some profits. I can't argue against that. That's actually an excellent way to look at it.
Yep.
If you're doing that, though, I would like to try to reopen the upside if you can work with a banker on that and get that planned out where you can set aside a little bit of the profit to maybe re-own some calls at some point in some time frame, or a combination of things. But again, back to our new partners, that's what's good. Get in with a good bank. If they don't know what they're doing, or they're kind of just letting you do whatever you want, and you're taking everything out of your operating loan, in my opinion, you're doing it wrong. You want to be with a knowledgeable guy or semi-knowledgeable guy. So if you have a banker, a broker, advisor, we'll put them in the same category, and there's three guys, at least two of those three should be pretty sharp in the markets. If there's only one that knows what's going on to some degree, you need to fix that. I think that's a major problem. The banker is a banker. He doesn't need to know everything. The ones we work with, that we got our sponsorship with, do farm. They do know the ins and outs of this stuff, and they do encourage it. Again, we're not taking money out of the operating loan for the marketing plans. They're taking money out of a separate marketing plan line. Why is that important? Because operating notes have only so much leash runway, whatever you want to call it, where you have a marketing line. They will back up your hedges, assuming that you're hedging correctly in the market. When I mean hedging, if you're making money here, you're losing money on the farm. If you're making money on the farm, you're losing money here. That general concept, actual hedging, not I think orange juice is going to go up. Let's buy a bunch of futures.
I need some pork belly.
Yeah, that would not be good for an operating line at all, or I meant a marketing line at all. But that's kind of where we're at with all this stuff.
Let me ask you a speculation question, because I am super interested in wheat right now, and I know what it means to trade wheat, John.
Sleep in the street.
What do you think about wheat right now, especially with the stuff going on in Ukraine?
Well, some guys had been selling some puts on it earlier. Now those puts are worth very little, and they can get out with profits. I like that concept before it took off. It didn't seem like with a half a crop, this is going to be one where we're going to be bouncing on 5 this year. So we have the Kansas shorter crop. I had my eye on that May-July spread out there in Kansas. That would be the old crop, new crop. I was looking at it. I don't know where it is lately.
I don't have that one on my
screen. But
it
was at -4.5. I felt like that was a good place to be. So there's some spreads that I like. I'm not sure where it is right now. And we've been doing some intermarket spreads, meaning like Minneapolis versus Kansas City versus Minneapolis, Chicago versus Minneapolis, and all the various combinations. Those have all actually been somewhat predictable and decent. Guys have been in there lightly. I like those. I think those are going to be fun all year long. And then the outright price, the big one. So there's 2 guys, and I hope they hung on so far, because it's up above the price when they call me. And this is another thing that we do. So a guy from North Dakota called me, and here's my situation. I want to get rid of this wheat. Should we be looking at buying puts? Does it have upside? Should I hold it? So we're holding right now, but we are looking for a place to buy puts if it runs up a little bit on this Russia-Ukraine. So there's two guys in the same boat. This sounds like guys want to hang on to their wheat a little bit more than normal this year, which is good. And that'll help with just all this wheat coming in at all time. So you have like a little tighter hands, and I think if the Russia-Ukraine stuff continues to go the way it's going, wheat could potentially go up quite a bit. That's not something that's going to be super predictable, but again, back to where we started this whole episode, recognize what kind of year you're in versus where we've been for the last couple of years. We haven't had to worry about the Russia-Ukraine thing for the last couple of years. This year, it's very real, and they might not even be able to ship out of that region if it continues to amplify in that area. So I like the potential wheat has. It does tend to let a guy down. So you get these high hopes and you get these dollar signs in your eyes. And wheat has a way of, wiping that smile off your face. But at least we have the best looking year that we've had in a while for potentially higher prices.
Well, and as I stated, I'm only talking from a speculation side, not a hedging side. And I brought it up because you were talking about the difference in your using that loan versus maybe some cash that you have
on the speculation side, it would be going back to the spreads I was talking about, like the new crop, old crop, Kansas, and then the inner wheat spreads, Minneapolis versus Kansas versus Chicago, when the opportunities arise.
Yep.
That's where I'd be on the speculation side in wheat this year.
And that's something that you can call us and talk about the difference in. And we're also going to make sure you're not using your hedging account to do speculation plays, but there are speculation plays across all markets. Yeah. There's always something to do.
Yeah,
and not necessarily that you should do it, but there's always something to do.
And that's another thing that you make a good point. A lot of guys that I have 2 accounts, and one's going to be, the hedge, and one's going to be more on the speculation side. And that you want to organize it so you know what your goals are on each. On the hedge, it should be hedging, and you shouldn't touch it for any other reason other than that. On the speculation side, that's a very gray area. It might be a partial hedge, and then you'll just have to make your judgment on whether this is a legitimate hedge or not. And when I say gray area, there's a lot of gray areas: selling options, selling calls, selling puts. It depends on who you're working with as far as your lender goes and what they like. I know a big outfit that's very popular across the country does not consider a sold call as a hedge, and they won't fund it for you. where the next guy, the guys we were working with, that's not considered a hedge that you can count on, because if it doesn't get up there, you won't be short, but it's a value added hedge. So it just really depends on the way your banker sees stuff. There is gray areas in this. But if you have, it'd be just like writing a covered call in stock. If you're sitting on all this corn in your bins, the guys write calls on it, indefinitely trying to generate more revenue off what they're storing. Totally a legitimate hedge, because you're willing to sell at that price. If it doesn't get there, you get to keep the premium. There's nothing wrong with covered calls. It gets very complicated, and we won't get into that, but that's our job. What we like a guy to do is like, here's where I'm at. I have to get rid of 20,000 bushels. I want to re-own this. I don't want margin calls. So you have about 3 or 4 different things. And then when the time comes, I'll have a plan for him that he likes and the banker likes and everybody likes. But that's our job to try to figure this out. Other guys are a little more independent, and they try to figure it all out on them by themselves. And some guys maybe thrive in that environment, but it's really hard to do that without some backup knowledge, or I don't know, like I say, our network, using our network and our experience. But that's what we do on a daily basis, just try to plan this stuff out. So back to where we started, I'm going to concentrate on trying to re-own some of these bushels that got sold. I do think we're going to take out the highs later on, meaning these pre-summer highs. I think we're going to see higher prices going into spring, but we haven't had enough numbers out to know that yet. Yeah. Meaning if we had 2 million acres of corn tomorrow, numbers are going to change. Things are going to change. My re-ownership ideas are going to change. But what if beans are 500,000 acres less? That'll change those numbers a lot. So we're right on this razor's edge where we don't know what to do yet because we don't have enough data, but it won't be too long before we have plenty of data to start planning.
We need to take a break here for our sponsor, John.
Sure.
This episode of Hedge Heads is brought to you by FM Bank. FM Bank, built for agriculture, with 6 locations across southern and western Minnesota, serving producers throughout Minnesota and the eastern Dakotas. At FM Bank, you're not explaining farming to a banker. You're working with lenders who actually farm themselves and understand the decisions you face every day. FM Bank's segregated hedge and marketing line program gives producers dedicated financing to execute marketing plans, manage risk, and seize market opportunities without tying up operating capital. From field to finance, experience the advantage. Visit mybankfm.com to learn more. Member FDIC.
All right, welcome back, John. We kind of covered grain. We should probably talk some cattle, huh?
Let's get over to cattle. I don't like what I see in the box beef. Here's what's happening. You got a tale of two worlds. The sale barn is full of guys that said for the last 2-3 years, everybody told us not to buy at this price. And had we bought, or when we did buy, we would have made money, or we did make money. I'm not going to listen to anything, but I'm going to go with my gut here. And I'm going to bid these cattle up. So that's what's happening at the sale barn right now. And it's not uncommon. So it's been happening for the last 2 years. But what's really different is box beef's not following this year. That's what's different.
That's different from last year, for sure.
It's different from the last 2 years. Could box beef come around? Yes. That is your gauge on the health of this market. In my mind, until you see box beef turn around, it's really hard not to be hedging these rallies. I think that you got a declining market. I don't think we're going down to low prices.
We're not going back to 113.
Yeah, we're not going back to 89 cents. But we're at elevated prices, and we're probably likely to stay. But I do think that we're on the downside of on the downside of the mountain of this huge bull market that we basically have had for 3 years, meaning that rallies are now shorts more than buys. But it hasn't been the most predictable. But in my mind, watch that box beef. That's not looked healthy. Diesel up, 33 cents over the last couple of days. That's not going to help. Cattle's going to get bothered by that. We have all these grain reports of corn, and then the feed starts looking like that's going to come up. That won't help. So I think that you have a lot more against what's happening against cattle than we have the previous 2 years. But cattle surprised though also for all these years. It's been this market that isn't folding fast because we're not expanding fast. How much did that heat hurt the cattle here? You hear all kinds of crazy numbers. Just get online. You're going to see whatever number you want. 100,000 is the latest one.
They were just falling over.
Yep. So if I was spending this at the sale barn, I'd tell my wife, hey, look, I need all this money because 100,000 cattle just died and it's going to go to $1 million. That's exactly what I'd be telling my wife I was paying this. What a break even's $250 right now.
Yeah.
It's really high. It's really dangerous. And I do think that you need to see box beef move up. It's unlikely to move up this time of year. So I'm not as optimistic as some others, but I also respect this market. It's a very strong bull market that has shown no signs of expansion yet, but futures are ever looking forward. And by the time you realize it,
old too.
Yep. It's an old, decrepit bull market. As a matter of fact, it's one of the more impressive lengthwise that I've ever seen.
It's been crazy. It's super impressive.
It is. It was just a perfect storm of guys getting out of the business because of low prices, the hard work where the second generation the next generation didn't want to take over, and then guys retiring because of age. I mean, it was just at the same time the herd went down, demand went sky high, and it's just this perfect storm where that's why it's a 3-year bull market instead of a year and a half, like in 12 into 13, 14. But what you don't want to be in the cattle market is the guy left holding the bag when the music stops. It feels like the music's going to stop here pretty soon. I don't like the way the energy prices are trending. I don't like the outlook there. I think people's pocketbook's going to get hurt. I think the box beef is going to stay on the defensive. We have border open now. We have exports, that we didn't have before, imports, I should say, coming in. And it's just this rising water. You're starting to have to stand on your desk here. It's the flood's coming, and it's almost here to where it's turning bearish, but we're definitely not there yet.
No, and I agree with you that even when it does have a little bearish downturn, I don't think we're not talking like a 2008 market drop or something. Like it's not.
Well, you could if the stock market goes down. If you have the outside markets, and if energies keep going up like that, you will have the outside markets. That reminds me, we should talk about the Dow.
Yeah, let's, because it's been strong again.
Yeah, I shorted a micro Dow here the other day. You guys can go ahead and get long now. This is a short term play for me. I do think the energies are going to affect the economy. That's why we're talking about this. It's really popular in micro crude, micro NASDAQ, and the micro S&P. You also can do the regular size contract. It's still called E-mini. Whatever your choice is. But it's been a rough ride if you've been a short guy. But it just feels like, again, there's not a lot of good news out there, and it's more bad news than good news after a run. So I'll try a little adventure on the short side and see how it goes for me here. I'm not cheering for a bad economy, but we're headed towards trouble here, and things do change quick, with people in charge. But this one looks like I don't know how it's going to change quick, and that's why I'm a little more bearish short term. I don't know how you feel about it.
I'm watching. It's the same. You want to talk about an old bull.
Yep.
So, but what does the actual market look like? So,
what a market that I am interested in over the long term is my new hot metal market's going to be copper. That's going to be we're going to talk copper
I've
in the
seen
coming days.
a lot of copper talk lately. So
there has been hype. 2 years ago, it started where we're going to run out and there's not going to be enough. Here's the numbers. And then, of course, it went down right after that. I remember that, where we're going to run out. And anyway, it's gone down. But guys tend to be a little early in their predictions. I do think with advancements in technology, population growth, and all the stuff that you will, and the expense to mine copper, everything's going to start leaning towards where it isn't going to be this cheap metal that everybody uses. It's going to be. So my macro view on metals. I like them all. I like them all in the current environment that we're in. Very volatile, very dangerous. But copper is a market we're going to talk about in the days ahead.
I like it. Well, John, we should wrap up there. Anything to end on, or just leave your number?
Well, let's get ready for the numbers tomorrow. Just give me a call, 218-731-1578. If you're a subscribing member, make sure that you use that phone too. You're not going to bother me. I expect phone calls from you. And if you want to know what we're up to, anytime, give us a call in addition to everything else that you get. And anybody that's listening also give me a call and we'll chat about whatever you want to. And that's about it.
Thanks, John.
Sure.